Hi guys, before and after the general election, the Labour Party spoke at length about how dire the public services were in. They ruled out a number of tax rises and said they would not go back to austerity. So with very few options on the table, one of the ways to raise finance which keeps coming up is a wealth tax. Here I'd like to give a bit of background on what it is, what are the advantages and disadvantages of a wealth tax, and if Rachel Reeves can be convinced to apply one. So a wealth tax is a levy on the total value of personal assets, including real estate, cash, investments, and other forms of wealth. Unlike income tax, which is based on earnings, a wealth tax targets the accumulated wealth of individuals. The concept of a wealth tax has gained traction in recent years as a tool to address growing economic inequality and generate additional government revenue. So in this video, I'd like to evaluate the pros and cons of a wealth tax, considering its economic, social, and administrative implications. By examining both theoretical perspectives and practical examples, I want to provide a balanced view of the potential impacts of a wealth tax. So what is its scope? Well, it's typically an annual tax on the net wealth of individuals, which includes assets such as real estate, stocks, bonds, and other financial instruments, minus liabilities. The rate of tax can vary, often being progressive, meaning higher rates apply to higher levels of wealth. While it may seem a new concept, wealth taxes have been implemented in various forms throughout history. For example, in the early 20th century, several European countries introduced wealth taxes to fund public services and reduce inequality. However, many of these taxes were later abolished due to administrative challenges and political opposition. Today, countries like France, Norway, Spain, and Switzerland have wealth taxes in place. Each country has its own approach to structuring and implementing the tax, reflecting different economic contexts and policy goals. So there are three main arguments in favor of a wealth tax: revenue generation, wealth redistribution, and economic stability. So one of the primary arguments in favor of a wealth tax is its potential to generate significant revenue for governments. This revenue can be used to fund public services, reduce budget deficits, and invest in infrastructure and social programs. For example, proponents argue that a wealth tax could help fund universal healthcare and education systems. A wealth tax can also serve as a tool for redistributing wealth from the richest individuals to the broader population. By taxing the wealthiest, governments can reduce economic inequality and provide resources for social programs that benefit lower income groups. This redistribution can help create a more equitable society and reduce social tensions. Finally, concentrated wealth can lead to economic instability, as it often results in significant power imbalances and reduced economic mobility. A wealth tax can mitigate these issues by reducing the concentration of wealth and promoting a more balanced distribution of resources. And this can lead to a more stable and resilient economy. Now, there are some potential disadvantages of a wealth tax: capital flight, impact on investment, and administrative challenges. One of the main concerns with a wealth tax is the risk of capital flight, where wealthy individuals move their assets to countries with lower or no wealth taxes. This can lead to a loss of investment and economic activity in the country implementing the tax. For example, France experienced significant capital flight when it introduced its wealth tax, leading to a reduction in the tax base. Critics also argue that a wealth tax can discourage investment and entrepreneurial activities. Wealthy individuals may be less inclined to invest in businesses and innovative projects if they face high taxes on their assets. This can stifle economic growth and reduce job creation. Finally, implementing a wealth tax can be bureaucratically complex and costly. Accurately assessing the value of assets, especially non-liquid ones like real estate or art, can be challenging. Additionally, enforcing the tax requires significant resources that can lead to legal disputes and even tax evasion. However, other things need to be taken into consideration when we're talking about a wealth tax. Proponents argue that it's a fair way to distribute the tax burden, as it targets those who have the greatest ability to pay. They contend that wealth is often accumulated through advantages such as inheritance, access to education, and social connections, rather than solely through individual effort. Therefore, a wealth tax can help level the playing field. Now, public opinion on wealth taxes vary widely. In some countries, there is a strong support for taxing the wealthy to reduce inequality and fund public services, while in others, there is significant opposition, with critics arguing that it's unfair to penalise success and that it can lead to economic inefficiencies. The ethical implications of wealth taxes can also come into play, as it raises questions about the rights of individuals to retain their accumulated assets. Now, for policymakers and governments considering a wealth tax, it's crucial to design the tax carefully to minimise potential drawbacks. This includes setting the appropriate tax rates, ensuring accurate asset valuation, and implementing measures to prevent tax evasion. Additionally, ministers should consider complementary policies such as closing tax loopholes and improving international cooperation on tax affairs. Now, I want to come back to the point that I raised at the beginning. Will Rachel Reeves, the Chancellor of the Exchequer, consider a wealth tax? Well, the new Labour government have put equality and fairness high on their list of goals, so it would make economic and political sense to introduce such a tax. However, the government may prefer to squeeze people on benefits or rely on austerity to deal with the so-called black hole in the public finances. I believe personally a wealth tax makes sense. The richest in society have got dramatically wealthier over the last few decades, and while it may be complicated to evaluate their assets, many are in the non-liquid form, meaning that their owners can just sell them up and leave. So let me know in the comment section, guys, what you think about a wealth tax and if it will be implemented. As always, your comments are greatly appreciated. Thanks a lot.